Hey everyone, welcome back to Corporate Decoder, the place where we try to see if this company is on the up and up or going down the drain. In this report, it looks like our hotel friends are having quite the time blending old school hospitality with some modern financial twists, so let's dive in. And hey, before we get into the nitty gritty, if you like getting clear, simple explanations of these big, important financial filings, hit that subscribe button and the notification bell. We also have a super active community over on Discord, so check the link in the description to join us. Alright, right off the bat, we're looking at their balance sheet as of July 31, 2025. Think of this as a snapshot of what the company owns and what it owes. What's interesting here is their total assets are staying pretty much the same, hovering around $14.2 million. But on the flip side, their total liabilities are climbing a bit. They went from about $13.5 million to almost $14 million. That means the company is getting a little more in debt. Now, looking at the asset side, their property and equipment are actually going up slightly to about $6.8 million. This usually means they're investing in their hotels, which is pretty standard for this type of business. But back to those liabilities, their notes payable to banks, while not huge, jumped up to almost $80,000. And their notes payable to related parties, which often means loans from insiders or affiliated companies, saw a pretty big jump from $1.15 million to $1.71 million. Now let's jump to the income statement and see how they're actually making money or maybe losing money. For the 6 months ending July 31, 2025, they reported a net loss of about $362,000. That's a bit worse than the same period last year when they lost about $330,000, a profit party over there. Their total revenue is down a bit from $4.13 million last year to $4 million this year. It's not a massive drop, but it's noticeable enough to keep an eye on. It seems their room revenue specifically took a hit, dropping from just over $4 million to about $3.8 million. Interestingly, their general and administrative expenses, which includes things like management and legal fees, went down from $1.12 million to $998,000. That's a good sign they're trying to cut costs in the back office, which is smart, especially when revenues are a little soft. But then they have this line item called BW Rewards guest voucher expense, which shot up to $66,000 this period from $0 last year. This sounds like they're giving away more freebies possibly to attract customers, which could be good for business, but it definitely eats into profits. Looking at the bottom line, the net loss attributable to the owners of the company, the controlling interest, was about $512,000. That's a pretty substantial loss. Moving to the breakdown for just the 3 months ending July 31, 2025, total revenue was about $1.8 million, down from $1.84 million in the same period last year. So that revenue trend continues. But here's a weird one. Their operating expenses went up from $212 million to $203 million in the same 3-month period. Wait, that's not right. Operating expenses went down, not up. That's actually a good thing. They cut their operating costs by about $88,000, even though their revenue dipped slightly. And their net loss attributable to controlling interest for just this 3-month period was about $391,000. Still a loss, but slightly better than the previous year for the same 3-month stretch. Now let's talk about their actual hotels as assets. On their balance sheet, property and equipment net is listed at about $6.8 million. This is what the hotels are officially worth on paper after accounting for wear and tear, which is depreciation. Breaking that down further, the land value is a hefty $2.5 million for both hotels. The buildings and improvements are where most of the value lies at over $11 million, but the accumulated depreciated, now let's talk about that debt. They have mortgage notes payable totaling about $8.6 million. That's a big chunk of money. And when we look at their minimum debt payments during the next few years, it's quite a commitment. In 2026 alone, they owe over $673,000 in payments spread across mortgages, other notes and notes to banks. And then in 2027, it jumps to almost $2 million all due at once. That's a lot of debt to manage. Remember those related party notes payable we talked about earlier. That $1.7 million debt to insiders doubles in 2027 for some reason. That's a pretty significant financial obligation that increases in the near future. Now, a key detail is that InnSuites Hospitality Trust is the major owner of RRF Limited Partnership, holding 75.89% of it. This partnership is essentially the operating arm that manages their hotels. Within this partnership, there are these things called limited partnership units, and a good chunk of those Class B units, about 22.51%, are owned by James Worth, the company's chairman and CEO, and his affiliates. This means the top boss and his family are pretty heavily invested directly into the operational side of the hotels too. Let's really zoom in on their cash situation or liquidity. They have about $27,000 in cash as of July 31, 2025. That sounds like not a whole lot for a company with millions in debt. They are counting on those credit lines and advance facilities to keep things afloat. They believe they have enough cash to cover obligations for the next 12 months, but it relies heavily on external factors and maybe getting more loans. They also have this investment in a technology company called IBC Hotels from back in 2018. The note receivable from this sale is $1.925 million. However, Unigen is behind on payments and is seeking more investment. This is a high risk, high reward situation that's still developing. And here's where the story gets interesting. They're actively trying to sell both their Tucson and Albuquerque hotels. The estimated market asking price for the Albuquerque hotel is $9.5 million, while the book value is only $907,000. For the Tucson hotel, the asking price is a whopping $18.5 million, but its book value is almost $6 million. They believe these hotels are worth more than what's on their books, which is a positive sign if they can find buyers at those prices. However, looking at the overall financial picture for the 6 months of 2025, they reported a consolidated net loss of $362,000 compared to a loss of $330,240. This means they are losing more money than they were last year. When we look at adjusted EBITDA, a measure of operational profitability before certain expenses, they went from $35,000 to $140,000. This looks good, but it's mainly due to adding back depreciation and interest expenses. It doesn't mean they're actually making more cash from their core business. And then there's FFO, funds from operations, a common metric for real estate companies. For the 6 months ending July 31, 2025, it was a positive $9,000 up from $15,000 last year. Again, these numbers are small and don't paint a picture of a booming business, especially when you consider the net losses. My take on this is that InnSuites Hospitality Trust is in a period of transition. They're trying to manage hotel operations while also exploring new avenues like clean energy and hotel tech. The biggest strength is their belief that their hotel properties are undervalued and could fetch a decent price if sold. However, their debt load combined with slightly declining revenues and significant net losses is a major weakness. They're also heavily reliant on financing from related parties, which can be a red flag. The Unigen investment is a wild card. It could be a huge win or a complete loss. They need to either successfully sell those hotels at their target prices or significantly improve profitability from their current operations to really get back on track. Alright, that's our deep dive into InnSuites Hospitality Trust's latest report. What do you think about their strategy and their financial health? Let me know in the comments below. And if you found this helpful, smash that like button and subscribe for more corporate investigations. And don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next one.